Last time you were on the show was back in March, where you discussed your crypto outlook amid a crypto crackdown. Since then, that crypto crackdown has been amplified with the SEC suing Coinbase and Binance. But we also saw some good news with regulatory advancements here in the US. And of course, we saw a signal of confidence from Wall Street with all those filings for spot Bitcoin ETFs. So what do you think is the main driver for crypto markets right now?
So similar to March, the story this year has really been the macro backdrop. What's good about the regulatory developments that we've seen is we've started to kind of work through some of that regulatory unclarity, which was keeping, I think, a lot of the big institutional money off the sidelines. So when you look at things like the BlackRock ETF filing, for example, that's very encouraging because that's a very big player in the space who's not looking to be first to the market like some of the other ETF filers. They're looking to stay the biggest in the market. So the very fact that they're even filing a spot Bitcoin ETF means they themselves are at least comfortable with some of the regulatory clarity or the outlook for regulatory clarity going forward. So, things like that I think are encouraging. The conclusion of the Ripple lawsuit, I think was encouraging, not necessarily because it was a quote unquote win for alternative tokens, but just because it was such an overhang for so many years. This has been an open question for investors, particularly as it relates to whether or not to classify, cryptocurrencies as securities. This Ripple lawsuit has been a big question mark. So even to just get some, irrespective of what the outcome was, although it was favorable for altcoins, just to get some clarity, a conclusion to that, I think is starting to give institutional investors some comfort that, okay, we're working through this regulatory backlog, and that's going to provide some clarity for a path to higher prices going forward.
Let's go back to those spot Bitcoin ETFs, that signal of confidence from Wall Street in Bitcoin, really. What do you think that could potentially do if it does, in fact, get approved by the SEC? Do you think it could potentially spur a Bitcoin buying spree, as investors could potentially see Bitcoin as more of a trustworthy asset with Wall Street's backing?
Yeah, I think what's interesting is, spot ETFs themselves, that idea has been around for a while. I think what's as interesting or perhaps more interesting is, the fact that it's BlackRock. They're so big that they have to be looking at putting this in portfolios and things like 401ks. And so it's part of, I think last time we spoke, we mentioned this idea of kind of the mainstreaming of crypto. And so, things like payment, on-rails, fiat on-ramps to crypto, for kind of everyday users. And so this is just part of that. Right now with Grayscale, when we talk to institutional clients, they already know about it. It's kind of more of the echelon of, yes, it's a retail vehicle, but it's more the domain of people that already understand, the state of play, so to speak. All of a sudden you have a group like BlackRock, filing for a spot Bitcoin ETF. If that gets approved, you have to imagine that starts showing up on the menu of options for a whole new swath of investors, like, retirement funds and things like that. So that is what's, really structurally very bullish, I think, long-term for the mainstream of crypto.
So PayPal this week launched a dollar-backed stablecoin. What does that signify for markets?
So again, that's a very, I think, structurally bullish for the idea of mainstreaming of crypto as an asset class. Stable coins have long been kind of the, where Main Street meets the crypto ecosystem. That's where, a lot of folks have thought that, the onboarding, so to speak, of a lot of, kind of non-Bitcoin, maxis, for lack of a better term, would happen. And so, what's interesting about PayPal is they're in the payments game. So, we have to remember, of course, Facebook went down this route with Libra, which they then changed the name to Diem. Regulators quashed it pretty quickly, the Fed in particular. And that was around the idea of, Congress was uncomfortable with, among other things, the fact that tech companies shouldn't be getting into the crypto space. And so, when you look at something like PayPal, yes, technically they are a tech company, but they are in the payments game. And so, I caution the PayPal enthusiasm where it's structurally a very good sign long term. They do have some regulatory hurdles they have to clear, but I think that they're relatively well poised to do so. I also think this is important for the regulators because this now forces Congress and the regulators to, I think, take a little bit more thoughtful approach to stablecoin regulation. If we go back a year or two ago, it was kind of very quickly dismissed as, the famous line in Congress about, Bitcoin being the domain of money launderers and illicit activities and things like that. We've gotten, I think, the Bitcoin, the crypto ecosystem has done a good job of, frankly, lobbying Congress and educating Congress as to the importance of, CBDCs, the importance of crypto for America's growth long term. I think the language and some of the executive orders out of the White House reflects that. And I think this is a further forcing function that, again, regulators in Congress are going to have to contend with the fact that stablecoins and crypto are here to stay. So let's put some regulatory clarity, some thoughtful regulation around it to open up the path for the future.
So last week, Coinbase released its second quarter earnings report, which revealed that crypto trading revenue dropped as the SEC turned up the heat against the exchange. Also, last week, Robinhood released its second quarter earnings report, which revealed that crypto revenue dropped 18%. And of course, in that quarter, Robinhood delisted several tokens, including Polygon's Matic token, Solana's Sol token, and those tokens were mentioned in the lawsuits against Coinbase and Binance by the SEC as alleged securities. So what does that signal to you?
So that is ground zero right now for, I think, the crypto regulation is exactly that, whether or not these tokens are securities. So the SEC has come out and said Bitcoin is a commodity. We're not touching that. It looks like Ethereum might get a pass as well, and right now the focus is on, particularly after the Ripple lawsuit, whether or not these other altcoins, particularly these big ones that you mentioned, constitute securities or not. And so Coinbase and Robinhood, I'm not surprised trading revenues are down. That's going to be a function of the macro environment. 2022, let's not forget, was, just a really rough year for all risk assets, crypto in particular. I think it's going to take a little bit of time for those trading revenues to come back. I think that's also why we're seeing those companies start to pivot into things like asset management, which, makes sense from a corporate perspective. But, back to the kind of the spotlight on the regulatory issues that matter now. This is it. What happens to these altcoins? What constitutes securities? Because that has really big knock-on effects for all the other institutional players in the market, ourselves included. We manage products in the space. And so we're looking at, whether or not coin X is determined as security or not impacts, how we put that in a vehicle to deliver to customers. So the knock-on effects are huge, and I think this is the last piece of the regulatory puzzle, frankly, that has been an overhang for years where we need to see clarity. Now, the good news is things like the Bitcoin spot ETF can, kind of have a fast track to move along outside of this, but I think that there's going to be a big focus on these alternative coins, particularly on these exchanges, whether or not they're listed, how they're listed, going forward, and that's the biggest regulatory overhang we have, I think, right now.
What about the macro environment? I mean, recently the Fed raised rates to the highest level seen in 22 years, and yet we see Bitcoin in a tight range between $29,000 and $30,000, and we see Ether hovering around $1,800. We don't see much movement there. So how do you explain that?
Yeah, so the most interesting, and that's what we have our eyes on very closely. So this year, not surprisingly, risk assets got a big, particularly when you look at the kind of the high growth beta stocks, the so-called AI trade or the mega cap tech trade has done phenomenally well. Bitcoin as well is kind of a reflection of that. Going back to 2020, 2020 kind of post-COVID last time we spoke, the big question was, is Bitcoin going to continue to trade in lockstep with high value, growth stocks? And I think the answer is yes. So it's not a surprise necessarily that we've seen Bitcoin have the rally it's had this year, particularly off a low bottom. What's interesting is it's met some resistance at the 30K mark. We're seeing a lot of spot selling. I think it's reflective of profit taking in this environment. When you look to, the analog and the equity markets, there's a lot of discussion about whether or not the equity markets roll over. Again, particularly this kind of mega cap tech trade. There's a lot of concern about whether or not, we can actually thread the needle on a soft landing. You've had comments from the Fed this week about, not just higher for longer, but potentially even, further rate increases. And so, I think that's a concern for institutional investors, not even as it relates to crypto or Bitcoin in particular, but just risk assets, is what does the Fed do? Right now, markets are discounting rate decreases starting in Q1. To the extent that that gets reevaluated and pushed back, I think we could see, a tougher environment for risk assets, including Bitcoin. So I think in the near term, we're urging caution. I wouldn't be surprised, to see Bitcoin potentially, retest maybe the 26,000 level, 25,000 level, not necessarily imminently. But again, if we have equity markets roll over, you would have to think that Bitcoin would demonstrate some weakness as well. That said, people have been surprised this year as well as in Q4 of last year at the resilience of Bitcoin at some of these supports. We were talking to a lot of clients when Bitcoin was, hovering around 20,000, and they said, nope, we're waiting until it goes down to 15, or, we have a buy target at 12, and that just didn't materialize. And so I think, there's some very strong structural buying by long-term holders, by big institutions. at these supports, kind of 25, 26. Now that said, if we do see more of a soft landing scenario, if the recession, isn't as bad as people are expecting, I wouldn't be surprised to see a bid for Bitcoin. What's been the most interesting to me these last couple of weeks is, Bitcoin's always had kind of two aspects to it. One, kind of the high growth tech stock. And the analog I like to give is, just look at the ARK Innovation ETF. That's a very good proxy for kind of very high beta technology growth. Bitcoin's price action over the last couple of years has mimicked that fairly closely. But it's also had characteristics of quote unquote digital gold, which is what early proponents have long said about Bitcoin. And we saw that with, the Silicon Valley Bank disruption. Bitcoin got a bid, and you had these tech founders on Twitter saying, we're putting all our reserves in Bitcoin for now until there's some clarity here. We saw it when the U.S. debt got downgraded. Bitcoin saw a little bit of a bid. And so it is interesting that it is exhibiting kind of these, flight to safety characteristics, at least within the crypto ecosystem. To bring that back to the macro environment, I think there's a focus on some near-term weakness for all risk assets, Bitcoin included. But structurally, long-term, Bitcoin has looked about as good as it ever has at this point, kind of 3, 5, 10 years out.
So it sounds to me like we didn't necessarily experience maximum investor pain just yet.
No. I mean, I do think, like I said, we're seeing some profits, some pretty robust profit taking, some selling at the $30,000 mark. So that's, telling us that, you've got investors kind of, taking some chips off the table, so to speak. We've had some pretty robust outflows from Bitcoin ETFs, both in America as well as in Europe in the last 2 weeks. So again, it's, there's risk coming off the table. We're seeing that also in the risk markets, particularly, like I said, kind of the mega cap growth trade. And so I think the concern now, the threat now for investors is, if anything other than a soft landing materializes, and if it's worse than people expect, if earnings start to come in a little bit worse, although they've looked good so far, if the jobs market collapses, if we see any kind of tail risk, in the macro economy, and it might be the resumption of student debt payments next month. There's a lot of things out there that could, spark a risk off, a wholesale risk off movement, and in that case, you'd have to expect Bitcoin would trade down. Now that said, again, do I think it necessarily retest the $20,000 mark? No, but could retesting 25, 26 be in the cards? Absolutely.
And in full disclosure, I do want to mention that back in March, you did tell me that you warned investors at the start of the year that they should brace themselves for a bumpy ride. And so here we are. It could potentially happen. I see that you still hold that same sentiment.
There's no guarantees in investing except, Bitcoin will be a wild ride. That's one thing that's for sure.